Everybody, it's Brian Shannon from AlphaTrends.net. Today is Friday, the 25th, and we had a positive week for equities once again. What's most impressive is the fact that they added on to last week's gain. On Wednesday, I had laid out that I was thinking we were getting a little bit extended and perhaps vulnerable. Obviously, the market continued higher, and that's why I use this 5-day moving average as my guideline. I will never short while we're above a rising 5-day moving average. While the daily picture might give me reason for caution in this area. As I mentioned, I'm not going to blindly short there. So again, it's always about multiple time frame analysis. And as a swing trader, the primary trend for me is the intermediate term, and my guiding beacon there is that 5-day moving average. That's that orange line here we see on the 15-minute time frame, and there also on the 30-minute time frame. I simply change the math to keep that consistent across the different time frames. But again, you've got to be impressive with the market here. Here's what I had laid out for subscribers last night at Alpha Trends. We are back above the 50-day moving average, and we are also above the year-to-date volume-weighted average price. Where we were 50 days ago in the market was right here. This was 50 days ago. So what that means is on Monday, Tuesday, Wednesday, Thursday, as of Thursday of next week, if we're still in this general area for the S&P 500, or even if we pull back down towards that year-to-date VWAP and 50-day moving average, by the end of next week, this will be next Friday, what will happen to the direction of the 50-day moving average? It's going to start to look like this, because we're getting rid of these days in the 50-day moving average calculation. That's why you often see I have that vertical line that goes back 50 days, so I can anticipate the direction of the 50-day moving average. Now, why would that be important is the question. Well, one, we have a rising 20-day moving average. That's the first time we've had it all year for the last 7 or 8 days. We're getting a little bit extended, so it's possible we could continue higher, perhaps up to this level. What I think is more realistic is that we begin to pull back a little bit, and if we pull back, that would be healthy for this market. Where the market might get caught by buyers is right in here at the year-to-date volume-weighted average price, which had offered resistance previously, and the 50-day moving average will be flat. And then as we head into the week after next, that 50-day moving average will begin to turn higher, even if the market is flat in this area, because these days are lower than up in here. So that could be setting up the possibility, and here we have a 50-day, I'm sorry, the 20-day moving average coming up like this. We have the volume weighted average price off of this low coming up like this as well. So what that tells me is if we get a pullback next week down towards this level, we'll have a flat to rising 50-day moving average. We'll be above a rising year-to-date VWAP. The 20-day moving average will be there, and the volume weighted average price from that most recent low will also be there to potentially catch this market. Now, it's not a level I plan on buying at, but if it starts to move higher from there, that and is above a flat to rising 5-day moving average, again using multiple time frames, then I would be looking for the possibility that this market may have made a bottom, and it will mean I didn't buy the bottom. Only liars buy the bottom. Be realistic and try to catch the pieces in the middle if that's your time frame. My time frame, as I always mention, is that of a swing trader. It's not interesting to me to try to buy the bottom. If I try to buy it and I catch it, I know I got lucky, and I know that I broke rules doing so. So it's not something I'm interested in doing. Let's see what that would look like on the shorter term time frame, as far as if we get a pullback towards that level. Well, here's what the daily time frame might look like. So here's Monday, then let's say Tuesday, we kind of do something like this. And as that happens, what happens to the 5-day moving average? It starts to flatten out like this. And if we were to get trapped below that 5-day moving average, maybe a little sneak higher just to trap people, and then break below this volume weighted average price, and come into, now this would be Thursday of next week, and Friday, this volume weighted average price off the recent low would be right around in that area. The 5-day moving average would come down like approximately this, and then heading into the next week. So again, this is all a potential scenario. It's not a blueprint, it's not an outline, it's not a prediction, but this is how you need to look at your analysis in the market and be anticipatory rather than reactive as most people are. Most people are wanting to buy stocks up in here. I don't want to buy them up there. I don't want to buy them when they're extended. And I don't want to buy the pullback. That's absolutely true. Instead, I want to buy right here as the short-term trend becomes in alignment with the longer-term trend. After we've seen a pullback, it turns sideways, and then we can manage our risk with a stop below whatever the most recent relevant higher low is for the time frame you're involved in. And again, my time frame is a swing trade. I change my mind about the market as the market gives me new information, as any successful trader will do. The NASDAQ might do something similar where maybe it rallies up a little bit, perhaps up to the volume weighted average price from the all-time high right up in here. So, we've got that overhead. Maybe it does this, then starts to come down. And again, the 50-day moving average will start to flatten out. The 20-day moving average will come up like this. The volume weighted average price off of the low will come up in that same type of fashion. And then we would be looking for the possibility of this. Again, not a prediction, it's anticipatory analysis. The Russell 2000 is, hanging out right at what is its 50-day moving average, just maybe starting to flatten out. Same story here. You can see I've drawn that volume weighted average price off the recent low. The biggest problem with the Russell 2000, the reason I don't like this as much as maybe some of the other markets, is we had over a year of support in this area. It seems highly likely that it will offer resistance. Doesn't mean it has to, but it's certainly a level to be aware of as a potential source of supply. I had mentioned on Wednesday that the semis were the girl that we brought to the dance, and she wasn't looking as good anymore. But you know what? She started looking better again as it got back above that volume weighted average price from the peak from the beginning of the year and the 50-day moving average. So does that mean we just want to marry her? No, of course not. We want to wait, test the waters, see what it looks like, maybe somewhere in here, and then get involved. The other option, of course, with all of these markets is that that doesn't happen, and this is just another rally that's doomed to fail. And if that were to happen, it might look like this and then fail and get back below that year-to-date VWAP. That would drag the 50-day moving average higher. But for now, we're in this area where, it's kind of up too much to buy it because, it's not low risk, and it's too soon to short it because we have this rising 5-day moving average still. So we're in that area where everyone wants to say, are we bullish, we're bearish, what's next? How about we let things settle down and let the market reveal more clues to us before we start putting on a lot of risk? Individual stock wise, there's been some great winners. We're involved in uh, Altria Group, actually, adjusted for the dividend down at $50.90 per share. OIS has been a good one this week, as has been Lockheed Martin from an entry over at 445-ish. Gold, I got stopped out of today. Alto, I'd put this on Twitter, just as it was, I think it was 607 when I put it on Twitter, right around this area. And, Alto, big short position, sold some as it broke this high and will likely add some back, but there's still a lot of great setups in the individual names. And I think that what happens a lot of times is people look at the market itself and say, the market's not giving me clear direction, so I'm not going to get involved. But the fact is, under the surface, there's still a lot of great trade setups, and that's what I do each and every day. We got involved in D Now. I put that on Twitter as well, over at 1065-ish. This was a new entry today in Checkpoint right here. There's still individual names, and I believe that it's a market of stocks. It doesn't have to be the market does this, so all stocks lift the rising tide lifts all boats. Sometimes there's boats, sometimes there's a salmon that's going upstream against the current, and you've got to trade each trade based on its own merits, not always being obsessed with the market. Being aware of the market and maybe sizing your positions according to risks involved in the overall market. But again, if you're here to make money, it's all about the action in the individual names. That's where my focus is at alphatrends.net each and every day.